Okay, let's talk about the path to 200,000 Bitcoin. I don't want to spend too much time going over why I believe we're going to go to 200,000 in this cycle, or possibly above that. That is clearly covered in the 4-year cycle videos that I just mentioned before. Again, if you need to know or want to know why, go over those videos again, and you'll get a fairly good sense and an idea for my views on that. But very quickly, the 4-year cycle spans price action from one major low to the next major low, and I have it marked starting back in the 2011 time frame, because that is essentially when people began to transact in Bitcoin and we had some true price discovery. We did not have true price discovery in 2010, as evident by the 10,000 Bitcoin for pizza, for example, but there really wasn't any real exchanges on board. There was no real onboarding for fiat to Bitcoin. It wasn't until 2011 that we began to have some real price discovery, and that's when you saw Bitcoin get up above the $1 mark and go higher. From that point, we had 142 weeks to the first real big bubble top in 2013 at that sort of 1100 or 1200 price range, and then we had a 58-week bear market decline into the first real major 85% decline, even though we had one here as well early in that cycle. But this was the first real mainstream decline into the 2015 lows there. That was the end of the first 4-year cycle in Bitcoin. 142 weeks up, 58 weeks down, exactly 200 weeks or 200 bars here on a weekly, almost 4 years, followed by a flat or sort of foundation building base here, and then a slow and then became rapid bull market climb over a 153-week period, which is just shy of 3 years. 153 bars higher to the top in 2017. Of course, most of us were around for that. And then we had a subsequent 52-week bear market. So similar structure again in the next 4-year cycle, where we came up for 153 weeks, down 52, for a total of 205 weekly bars. And of course, in a 4-year cycle, you have 208 weekly bars. So both of these closely resembled a 4-year cycle pattern. And I think what's important here is to understand that although I am predicting price in the cycle, I am not trying to predict exactly when that top occurs and when it happens. In cycles, we focus more on time and not so much on price. I'm using prior price action and price behavior in the prior 2 cycles to predict the price, but I'm really more about time, and I'm really more about cycle lows and major lows, because cycles are measured from low to low. So if we look at the end here of the bear market and the end of the bear market, the 4-year period between 1, 2, and then now 3, pretty much the cycles are telling us that we're not going to have another cycle low until late 2022. That's when I expect the end of the next bear market low to occur. But what happens in between really is something that I think nobody really knows. And as the market matures and as the technology grows and adoption hopefully begins to grow and mainstream attention comes into play here, and maybe an ETF gets approved, where the top in the cycle occurs will vary and will change. But what should not change is where that low occurs. So the cycles don't change. I hear a lot of people talking about how the cycles are going to shorten or they're going to lengthen for whatever reason, and I can tell you now that they won't. They just don't in cycles. Where the price high occurs can certainly change, and I'll cover that in the last point where I talk about a possible left translated cycle. Left translated cycle means that the top occurs before the midpoint of the 4-year cycle, and I'll get into that again like I said earlier. But right now, if we look at the prior 2 cycles, what we can say is if the market structure remains similar, then we have mostly a 3-year period up, so 3 steps up, 1 step down structure to the 4-year cycle. And it's within this cycle low in December and the projected time of a top in around about the October time frame in 2021, that anywhere between those 2 points is I expect price to move higher and hit that target of around about the $200,000 to $250,000 price range. That $250,000 price range is roughly a 10x move from the highs set in 2017. Same as this move here was a 10x move set, actually was closer to a 20x move set from the highs of the bull market of the prior 4-year cycle. So again, no real science or definitive science behind that, just a guide on price action. But you can also, on a log scale here, kind of draw in, sort of a projection here, right? Like a line, a mean line. So as the bull market goes higher, obviously it stretches way, way beyond the mean. The Bollinger Bands extend, and then the bear market decline brings it back to earth, back down towards a mean. Then we rise along that mean for a while, and then of course we extend higher again. But exactly where this mean line exactly is obviously hard to determine, but you get the general idea that the trend over time for this technology, which is still in the early phase of its adoption, is following this type of trajectory. So there's a lot of price evidence over the past couple of 4-year cycles that tell us that Bitcoin is heading up into this area. And of course, from a market cap standpoint, we're still talking about Bitcoin at around about 3.5, 4 trillion at the most, at that $250,000 or $200,000 level. And it's at that level, or at that point, where I feel Bitcoin probably has much more of an intrinsic value at this point into an adoption. And we may even see after that, and I'm not going to touch on it today, but we may even see after that a 4-year cycle that goes from 2022 to 2026 that doesn't perform like this, that performs in a more of a sort of a sideways motion for the overall technology to kind of, and adoption to catch up. But that's a topic for another day. I think when you look at gold at 8 trillion in market cap, getting Bitcoin up to kind of that 3 to 4 trillion market cap by 2021, 22, I think makes a lot of sense, at least to me. And I think this is where Bitcoin is headed. Now, how does it get there is the question. I think a lot of people are obsessed with the intermediate time frame price action when they claim to be a hodler or a long-term investor, and that's just natural for any human to be impatient and to be greedy, I guess, and to really try and validate their bias that we are going to get to the $200,000 price range, and they need to focus on the price action in the short term to help them feel comfortable and confident that we are going to eventually get there. But I'm going to talk about how that is not the right strategy to have as a long-term hodler. Now, I have my personal views on how I think price eventually gets up to this level over the next 18 months to sort of 24 months. And I don't think we break out of that $20,000 price range until next year some point. So another 4 or 5 months of possibly going somewhat sideways before we get up, test this area, and then eventually break out. And once we do break out and it attains a lot more media attention and people start really getting in, then we can begin to accelerate those gains up to that point. But for a hodler, it really doesn't matter, and it shouldn't matter, because if you do recall in my 4-year cycle videos, that's not what I thought would happen from this point. I actually thought we would get more of a structure like we had here, where it built more of a base, so something more like this, and right, so it had this kind of path, which ultimately goes to the same point, but it spent much more time building a base between this sort of 3,200 and 6,500 range, then broke out and then filled the gap between that 6,500 to $20,000 range, and the third phase was going higher. So I'm going to zoom in here, but there are other alternatives as well. We could quite easily continue this move higher, smash 20,000 in 2019, get up to sort of $50,000 range by the end of the year. I mean, if you look at the trajectory from where it's been so far, where it's gone so far, this is the blue line here, it can get there. It has the ability to do that. So what's my point? My point is that I'm not Nostradamus myself. I'm giving you a time-based view on Bitcoin, and I'm looking at the price cycle, price action behavior, and telling you that you should be hodling here and not be worried about those those short-term moves. Because when you focus too much on these short-term moves, you begin to then second guess the HODL strategy, or you begin to get greedy and start to think that you're smarter than just holding for the next 3 years, that you can actually sort of obtain even greater gains by market timing over the intermediate time frame. And I'm not talking about trading. We all know that unless you're a professional trader or somebody that's really focused on improving your trading skills, that's not going to beat a HODL strategy. I'm talking about those so-called active investors who think they can probably sell out on short-term tops, buy a 30% drop, and so on. And I think it's been very clear, and I know it's clear from the comments, that many of you try to do that throughout this, let me zoom in here, throughout this move higher here, and it didn't work for you, right? Here it is here. It didn't work for you. Even when it got up to 5,500 rapidly, I know people got out and said, I'm taking some profit, I'm going to buy back in at 3,000 or 4,000. It didn't happen. And then we had this massive April move. And again, some people got out right here at the 7,000, 8,000. Many did actually in this point here. And then we had a very brief pullback and then a shot up to 14,000. And so many of you got out here, didn't buy back in because you couldn't buy back in. You were locked out of that move. And then you capitulated in the sense that you FOMO'd into buying at the $10,000, $11,000, $12,000 range, missing out on that whole $4,000 move, essentially reducing your Bitcoin stash, the amount of Bitcoin you had, because you were worried it was going straight to 20,000. And then it pulled all the way back to 9,000, and here you were kind of like losing money. You're losing money on a certain portion of your portfolio. My point here is that we're going to continue to see that. We're going to continue to see 30% declines in the market, 40% declines. They're going to be natural and normal, because when you look at the bull market here and the one before that, all these cycle lows, and these cycles are the 60-day cycles, all these were pretty much 30% decliners. So if you're going to try and time these 30% or 100% rallies and 30% declines, I can almost guarantee you that you're going to miss one or two of these. And if you miss one big one like this, it's going to cost you dearly. It's going to cost you dearly in terms of your overall portfolio value and, of course, the amount of Bitcoin that you have. You're not going to be smart enough to be an active investor in this space. Some of you might be able to, but I can guarantee you that most of you will not be able to do that. But more importantly, why the hell do you want to? I mean, how greedy do you want to get when your goal is a $200,000 to $250,000 Bitcoin price? Again, I'm not guaranteeing that in any way or shape or form. But if the goal is to get to 200,000, then that's enough, right? We're at 10,000 right now, and we're talking about a 25x move up to that level. Isn't that enough? I mean, a $10,000 investment right now is going to be worth $250,000 at that point if we get to that level. Why complicate the strategy? Why try and obtain more out of it when those types of returns are pretty much unheard of in the history of investing in any asset class? So you have an opportunity right in front of you here, and you have a clear path and a narrative that has, some evidence behind it, I just want to tell you that there's an obsession with short-term price here that is coming out of the need to get more out of this, or you're greedy to get more out of this, when really you should be saying to yourself, hey, I want to be at 200,000 Bitcoin with most of my Bitcoin preserved, and I want to be able to cash out a lot of them at the next market top, and I want to be able to walk away from this without any regrets, and that you executed on a plan that you saw early on, and you held through to the end. Too many stories of people getting shaken out of position and then never being able to buy back in. If we get a massive move like this one here, like this trajectory here, and you've gotten out because you want a lower price, you want a couple $1,000 lower price, you may miss out on $100,000 move. It really can happen. It actually already happened right here, and I outlined this in one of my videos. This was not my primary expectation to get to $14,000 by the summer. It just wasn't, but I clearly showed in one of my videos that was a possibility, just like this was a possibility here. And I said you don't want to be market timing and getting cute on price, because this could happen. If it does happen, you'll be locked out, and it's exactly what happened. So focus on the psychology and the goal that we have in front of us. I keep harping on the goal because that should be, from a smart hodler standpoint, the primary objective and the primary focus that you have in this entire time frame. And yes, it's slow and it's boring, but who cares? This is the goal that we have outlined, and this, if we can execute, will pay off handsomely for you and your family. In fact, I have a video dedicated to this topic in the channel library. I believe it's called Process and Discipline. Please go and watch that. It's very important. It talks about the entire process and discipline that hodlers need to have, and we need to get away from that trader's mentality, even when it comes to sort of actively looking at the day-to-day and week-to-week price fluctuations. Please go and watch that. I think it's very important for you, and it certainly would help. All right, let's end with the left translated cycle possibility. So what do we have here? So originally I thought we would trade under the 10-week moving average for a considerable amount of time, build a base kind of similar to what we saw here in this bull market, where early on we trended sideways mostly, and then we broke out of that, broke above the 10-week moving average. I like the 10-week moving average for sort of intermediate and long-term trend basis. In general, in the bear market, you're trending below a 10-week moving average. In a bull market, you're essentially trading above that. We're already well or truly above that, and the separation between the 10-week and price tells me that maybe something else is going on. Certainly not this type of price structure. And this was something that everybody on social media was talking about for the longest period of time. And that is not the model that we're looking at right now. I think we are looking more and more like kind of what we saw here in this 2011-2012 time frame, where we came down, we formed this low, we broke above the 10-week moving average. And look, if you look at this August time frame here in 2012, it pretty much came close. It was 50% below, but it came close to where it traded just for a given month. And if I go to a weekly as well, you will see that it traded only up into in this sort of 15 to 30 area for a couple of weeks. So there wasn't much price discovery at that point. And then similar to this one candle here, if you look at this monthly candle, December, if you go back to the November candle, okay, the high is only 11,300. So we've already taken out the high set in November, just weeks before the top. So you really have very little legitimate, let's call it legitimate price discovery, price action above that $10,000 range from 2017. So for all intents and purposes, even though we were sort of $6,000, which is a considerable amount below the peak, We've traded in this sort of $10,000 to $13,000 range for a far greater period of time than we did in 2017. So in some ways, we're already at kind of that double top period. We're already at that testing of the all-time highs level, even though from a nominal price standpoint, we're not that close to it. So to me here, it looks like we may even be flagging on a monthly, kind of how we flagged sideways here for 3 months. And if you look at the duration of this period here, we're pretty much at the same duration right here, allowing for price to maybe come closer to the 10-week moving average and then move higher. So we could be looking at a situation where, for the next month, let's call it, into September, there's a 60-day cycle low due in mid-September. We could get a flush down towards the 10-week moving average, maybe a move as low as 65, 6,800, and then that would serve to really shake out some of the bulls here that are on shaky territory. Obviously, I don't think we get anywhere near the lows. I think it's crazy that some people are still talking about fresh new lows or a retest of the lows. Those are behind us. I think if we get anywhere near those levels, then you can pretty much kiss Bitcoin goodbye, so to speak. I think we get a drop down perhaps, and then we come back up and test the $20,000 level in December even, and then even break out by January, and just go and use and kind of have this trajectory that we have here. We have these massive candles and get up to that 200 to 200 and say $30,000-$40,000 level by the summer. So just 12 months from this point, a straight shot up. So it's still the same type of price action that I talked about earlier, but getting there in a much shorter time frame, getting there in a 1 year shorter time frame. And then from a 4-year cycle standpoint, it doesn't change where the next big low would come from in say late 2022. It just changes where the top comes in that 4-year cycle. So where we talked about before seeing 3 years up, 1 year down, 3 years up, 1 year down, we would see something like 2 years up and then 2 years down to the cycle. And a whole host of reasons why that might happen, but we are seeing a faster adoption in some of the institutional money and space. We also have the price structure right here, how it got way above the 10-week moving average so quickly. Tells me that we may be seeing a massive run like that. And and why am I top early? Simply because once we get up to this $100,000 plus level, I think the level of retail involvement is going to go through the roof. I think a lot of people are going to be focusing on Bitcoin, and certainly the regulators and government bodies are going to be, I think, all over this. I think the next big threat for Bitcoin that may actually induce more of a bear market than we've seen in the past is probably going to be the response from regulators and the pushback that we're going to see. It's not something that kills Bitcoin, but I think from a threat standpoint, it's one that we have not yet fully appreciated. I think the market will appreciate it once regulators come out hard against something like this. So we could see a move up to this still to the $200,000 level, then your traditional kind of crash, a bounce back up, right? Get people excited again, but of course that fails, and then you get this sort of winding action down. And again, still looking at that 2022 area, and I'm not drawing this perfectly, of course, but 2022 area, and then maybe a move down to say $40,000 range. I'm not sure exactly where the number would be, but the $30,000 to $40,000 range looks like a valid area for the next big 4-year cycle lows too, for a number of reasons. But the main reason is that Bitcoin has shown us the ability to decline around about 80 to 85, 87% in a bear market. And if we have a 2-year period of decline, plenty of time for price to get down that far. And then if you look at kind of, let's just call it, that might be too optimistic, but let's just go from a $238,000 level and we decline 85%, then you're looking, oh, there you go, right at 34,000. So an 85% decline from a $230,000 level gets us around the $34,000 level, and that would mirror past 4-year cycle declines. Difference being here in a left translated cycle standpoint is that we had that top much earlier. So let's dissect this a little more. Here's a cycle low, 4-year cycle low. I'm going to draw the next 4-year cycle low right here. Okay, so what does a left translated cycle mean? So if we grab another color, the midpoint, and it's not going to be perfect, let's just say that's the midpoint. The top here in the cycle occurred well right of, and I do have videos on this in the channel, so the top here occurred well past the midpoint, and that allows for price to spend more time going higher, and naturally you get this price increase and less time going lower. I think in this case you get a left translated cycle that occurs left of the middle. Okay, and here's the next cycle low, 2022. Okay, so here's the midpoint, roughly around there, and that top occurs left of that. Traditionally, one caveat here, traditionally is when you see a left translated cycle, because there is less time going higher and more time going lower to the next 4-year cycle low, you could even have a situation where price comes all the way back down and even tests the prior low or exceeds, and that becomes a cycle failure. I don't think that's something we see in Bitcoin, but all the more important, so here's where I distinguish myself from your traditional HODLer. A traditional HODLer basically says that I'm in it for the next 20 years and Bitcoin's going to $1 million, it's going to 2 million, and I'm just going to hold. And that philosophy, I guess in some ways, is okay if one, Bitcoin does get to $1 million or 2 million, and two, that you're able to hold through each of these 85% declines and these 200x moves or 20x moves that you see. Some people can do that. Some people have done that, and kudos to you. I take my hat off to you. But I would much prefer to be in for most of that rally, okay, get out for most of the decline, and then when I buy back, I'm buying back with 10 times the amount of capital and buying 10 times the amount of Bitcoin. So if I can do that for a couple of 4-year cycles, then where I may have started with 10 Bitcoin, I may have 50 at the next one, and then I may have 200 or 300 at the next cycle low, and that's really my objective. Obviously, I personally am not going to double down like that or triple down, so to speak. I would be taking capital off and redistributing it in other asset classes. I know some of you are thinking, "Oh, you're crazy! The whole world economy is going to collapse, and every single dollar is going to be worthless." Well, I'm not one of those guys, unfortunately. I believe in Bitcoin. I believe in its future. I believe in its success. But I'm not putting every one of my eggs into that basket. Maybe it's just my experience. Maybe it's my position of where I am right now, where I don't want to risk that. Maybe I don't need to risk that personally as well. But that's just how I view the market. You're free to view it as you feel is the right. But that also goes back to why I only have overall kind of a 10, maybe a little bit more than that now, 10+% of net worth allocation to Bitcoin for that reason, because I don't need to add any more when I'm looking at sort of 20 and 40x moves in Bitcoin. That's going to do more than enough to really grease my portfolio and my wealth over time. I don't need to get greedy. I don't need to be sleeping, eating, thinking Bitcoin nonstop 24/7, and more importantly, worried about its success for me to be successful financially for the rest of my life. I don't need to do that, because I know, again, like I said, if I can stick to this plan, even a small allocation is going to be more than enough to do the job.